Good morning and welcome to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and thank you for joining me. Joining me also out there in there's the opening bells, so now you know the cash market is open. Joining me out there in the chat is my good friend Michael Fairborn, 20-plus year veteran of the financial market, great educator, and oftentimes will fill in for me here on this particular webcast. And thank you for joining us as we've moved our day from Thursday to Tuesday. All of you are still here where you're here in the live version. Hopefully you're here also in the recorded version as well. Thanks for joining us there. A couple of things we want to take care of today because there's a lot of stuff going on out there in the futures market as well as everywhere else. But the first thing we want to talk about is the fact that everything we discuss today is simply for illustrative and educational purposes only. Remember, it's not a recommendation or advice about any particular security or strategy or chart or anything else. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to considering any futures trading strategy. Also, remember that futures trading requires separate trading authorization. So understand that characteristic of the futures market and futures trading. Now, we're going to talk a lot about technical analysis today. Remember, technical analysis is not the only way to look at the market. It is theoretical. There are other methods, fundamental, probability analysis, all of those. Those are also theoretical as well. None of them are guarantees as to what the market is going to do. So Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Make sure that you are aware of the idea that there is risk out there in the market. The market can move, and it does move, and losses can occur. Also, we're going to be using the Thinkorswim desktop software today, specifically the paper money version of that platform. It's a great sandbox to learn in. It is not a guarantee of future success out there in the real world. There are some certain things that the paper money platform does not do that a real trading platform does, or the live trading platform does. Maybe that's the better way to put it. So make sure you're aware of that. And as you move your trading from the paper money version to a live trading platform, make sure that you keep those differences in mind. Now, we're going to discuss trades today in the context of entering trades, exiting trades. And so when we get to the context of exiting trades, one of the things that we have to talk about is the idea that stop orders might be used. Now, when we talk about stop orders in the futures market, it is important and it is actually imperative that you understand that stop orders do not guarantee an execution price. In the futures market specifically as well, because of exchange rules, the exchange may reject the order. It may substitute an exchange designated limit order based on what are referred to as protection points. And we'll talk a little bit about that as we put these on. So make sure that when you put on a stop order in a futures transaction, you understand that there are some circumstances that need to be paid attention to. So we're going to jump into this discussion today as we get in here. We're going to talk a little bit about what's going on in the futures market, and we're going to look at some examples. So let's do this. I'm going to pop back over here to my Thinkorswim desktop software platform. And again, welcome my good friend, Michael Fairborn, into the discussion. A lot of discussion going on already here this morning. And as we start to take a look at what's happening, this is do we call it day 2 after the tariffs, or is this day 1? This is tariff plus 1 or tariff plus 2 in the current trade wars. Now, we're not going to get into the politics of tariffs, but we will get into the impacts of those tariffs on markets and or those potential tariffs on markets. And so we're going to start here with the ES. This is our futures, kind of index futures grid. Take a look at the /ES, which is the S&P 500 E-mini futures market. We're not looking at a specific contract here. We're just looking at the market itself. And so we're going to zoom in here really quickly. Now, by the way, while we're doing this, this is a good opportunity for me to remind you to click on the subscribe button down at the bottom of the page if you haven't done so already. And that subscribe button is going to keep you connected to the Trader Talks webcast channel, where you're going to find the recording of this webcast as well as others. But, here we are on the ES, and despite the dire warnings and despite the dire potential for tariff implications to the overall broad market, because that's what the ES generally is considered to be, as the broad market, we see a gap down, sell-off, and a little bit of a rally. Then we saw a sell-off back down into the support level below the 50-period simple moving average. We see a rally yesterday back to above the simple moving average. And today we see a little bit of a gap up, and overnight we see that gap up and then that little bit of a sell-off to the downside. And we see that sell-off happening early and then coming back, and we're right at about that 50-period simple moving average at the current moment. So we're at 60.2917. We're just a little bit below that and coming back up, just kind of coming back up into that range. Okay. So as we get into this discussion, kind of seeing this swirling around here, RSI is ticking down on a daily chart. That would tend to suggest that maybe there's a bit of waning momentum here. We're going to look at this on a shorter term chart here in just a minute. But I also want to kind of pivot over here to the NASDAQ, which is where we saw, I think, probably the bigger move yesterday, that bigger gap to the downside. We opened down here, rallied up, but there was a little bit of a sell-off. And again, regaining the 50-period simple moving average. And from a technical analysis standpoint, that's probably a pretty important level. We can see that that area has acted as support. Well, if we go all the way back here into late November, early December, post-election, right? Bounce, bounce, bounce. A little bit of a break, but it kind of coalesced there. Bounce again, and now that's kind of what we're seeing here at this point. Kind of some circulating right around that 50-period simple moving average. That, I think, may be an important trend definition line here, right? We see the RSI, though, ticking down just a bit of waning momentum here once again on the NASDAQ. So we'll see how this day ends up now that two of the tariff targets have ostensibly capitulated, or at least blinked somewhat, right? So those tariffs are delayed. Canada and Mexico both agreeing to some concessions, and theoretically, we'll see if that bears itself out, but averting the economic challenges of some of those physical and imposed tariffs. Now let's take a look at the Russell 2000, which, as always, seems to always be kind of the area, since it contains the small cap stocks, those stocks that are maybe a little bit more sensitive to changes in interest rates and energy prices and input costs and those types of things, labor market issues and so forth, bearing the brunt perhaps of this move. And so let's kind of zoom in on this time frame here. We see this rally up under the 50-period moving average, and that 50 has acted as a resistance really most of December, right? So once we saw that big break to the downside, we see rally back up, rally back up, rally back up, bounce, 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 back down from the 50-period simple moving average. We can see that 50-period simple moving average kind of ticking to the downside. I mean, if you were to look at the angle of this and we were to put a horizontal line next to it, you can see that that 50-period is waning a little bit. And that would suggest that maybe we're starting to see more of an impact of that downward move. Now, the RSI, interestingly, is ticking down a little bit more than we saw in the NASDAQ and the ES. We see a gap down and a little bit of a rally yesterday. Today, we see the gap up right up to this horizontal resistance right at about the 2,300 mark. Again, reinforcing the idea that markets like big round numbers as levels of support and resistance. And this is a pretty good indication of that. 2,300, 2,300, 2,300, 2,300, 2,300, kind of hitting that level again and again and again and again, right? And then seeing that bit of a move to the downside. Investing world, we've got lots of great resources to help understand charts. Boy, I'll tell you what, if you are looking to learn how to read charts and how to understand technical analysis. Boy, did you come to the right group to talk about that. I'm going to ask Michael Fairborn to pop in there the webcast link to the playlist for getting started with technical analysis, and then also advanced charting techniques. A couple of great webcast series that can help you to learn a little bit more about charts. And then I would love to have all of you come to one of our technical analysis live events. We do a lot of those around the country. As a matter of fact, we were just in Seattle. Welcome to anybody that was here from there. And we're going to be in Atlanta this coming weekend. And then we're going to be in Scottsdale a couple of weeks after that. So we'd love to see you there. And we're going to talk more about technical analysis as we go along here. But banging its head up into this resistance level today and kind of pulling back. So what I want to do is I want to pull back down here into our kind of the futures grid that we have used on a number of occasions. Let's go down to our, let's see, here it is, our futures movers grid. All right. So this is the grid that that kind of gives us a little bit of a different picture here, right? This is that 1 year daily chart, but kind of zoomed in on the left-hand side with the CCI, Commodity Channel Index. And that's a kind of a trend strength gauge. And then on the right-hand side, this grid is a today 15 minutes. So each one of these candles represents 15 minutes of trading. And it also has a MACD histogram. The MACD histogram, again, another momentum indicator here. So this one just happens to pop up on the crude contract. This is the micro crude contract. And so this is 1/10 of the large size crude contract. So a little bit smaller, you can see the tick size, the tick value, the point value, and the notional value of that contract. If we were to change this to /CL, which is the larger contract, you can see that now the price is a little bit higher. I mean, the price is the same on the chart, but the size of the contract is larger. Tick size is the same, but tick value is larger and the point value is larger, resulting in a higher notional value. Yeah, and Ashkel asks the question, can you have 3 charts on the screen? If you wanted to add another chart, just go here to the grid side and add it either top or bottom, wherever you wanted to add it. If you wanted to add it, you can just click on that grid and it'll add another chart. And you can do whatever you want. As a matter of fact, I have grids that are multiple squares. And then you can do some other things with flexible grids. There's a lot of different ways. And there's some good stuff in the technical analysis playlists also that helps you to kind of set up these charts the way that you want to in terms of those grids. But here's what I happened to notice this morning as we start to see what's going on in the market, right? The crude oil starting to see a little bit of a bounce here. So I asked the question on X last night. And you can follow me on X. You can follow Michael Fairborn on X at Ben Watson CS, at Mike Fairborn CS. That's where you can follow us. But I asked the question, is this too far down to be a bull flag, or is it gaining some momentum here at the 72 mark? And when we start to see this move, this rally up, and then this little bit of a pullback, this is maybe a little bit more than a little bit of a pullback, right? From a bull flag perspective, when we start talking about technical analysis and we start talking about price patterns, bull flags typically tend to do this: rally up and then pull back some amount less than 50% of this previous range. So we would typically tend to see a bounce here, or you might see a pullback. Whoops. You might see a pullback and a bounce here, but very rarely will you see a pullback that is more than that 50% level and then a bounce. Oftentimes, that becomes a failure point for the bull flag, if that makes sense. We've got a great webcast that talks about a series that talks about trading breakout patterns. One of those is a bull flag pattern. And so the idea would be looking for this move and then the pullback and then the bounce. And we're starting to see a little bit of the bounce here on the 15-minute candle, but it's not yet really starting to break out above kind of this resistance level, right? So that 38.2 Fibonacci, we've used Fibonacci's before, but Fibonacci's can be a ruler that might give us a range. So we can see that it's gone below that 50% pullback and starting to bounce. So this might be an opportunity if, in looking at this in terms of the possible next direction of movement here, might be the line of demarcation, maybe right around that 38.2 pullback on the Fibonacci's, because you can see that on the 15-minute chart, this futures market is kind of running into this resistance level here, right around 72.09. Okay. Yeah, this is MACD down here. This is moving average convergence divergence. This is the histogram, not volume. So as we're looking for this, this might be our line. We might say, okay, I'm going to trade this to the upside if it breaks, because it's starting to right now, or we might trade this to the downside if it continues to fail at that level. And we see this now. We see a failed candle here, a failed breakout. Now we're starting to see a little bit of that break to the upside, right? But the candle hasn't closed. These are 15-minute candles. So the first 15 minutes after the cash market opened, we saw the down move and then a little bit more down move. And now that's starting to turn back around. We'll see if it holds here. And if it does hold here, then that maybe is going to be our indication in this particular case to look at the possibility is in this example, and simply driven by technical analysis, and this is not a recommendation, but simply looking at taking advantage of that possible move back down into this 70 mark on a failed breakout because of that longer pullback in this bull flag pattern. So it's Tuesday. We're going to have oil numbers coming out tomorrow, so we don't have a lot of information. So this is maybe some back and forth based on kind of the tariff situation at the moment. Now we're starting to see that move to the upside. So what our if this then that statement might be is if we get a candle that closes, and these are 15-minute candles, we get a candle that closes above this resistance level, then long, else wait. If we get a candle that closes below that resistance level at 72.09, then short, else wait. Does that make sense? We're kind of giving ourselves that kind of structure here. Now we can do this again. We're on the CL/CL. We're going to go to /MCL, which is a little bit smaller. We see the same thing happening here. We'll just draw that same line in here at that resistance level. And we're looking for the same type of scenario here. It would be a candle that closes on a 15-minute basis above that resistance or below that resistance to help us to take that directional move. Now, John says, well, what about a 5-minute candle? Could we adjust our candle time? And we could, and some traders may do that simply to gain maybe that little bit of time against what the price is doing. But at the same time, recognizing that the faster we make our signal, the more likely we are to get a false signal, right? And so this 15-minute candle gives us maybe that balance between, again, short-term movement versus maybe enough data to be able to make a decision. Now, on the longer-term side, we could zoom in and we could say, look, simply to go long here, I've got to see a close above the high of the low day. The high of the low day might be, this candle right here, or the high of the most recent low day might be the high here, so above 73. That would mean waiting for a while. That would be a longer-term trade in this particular case. So we're going to look for this closing mark on this candle to see where it ends up in that context. And we're starting to see some momentum moving to the upside here, right? Starting to see some momentum to the upside. Ray asks a great question here. Do we have a link for learning futures? So I'm going to give you some resources here. in just a second. But let's see where this candle closes as we kind of get into this mix. While we're waiting for that candle, let's pop around to a couple of others and just see what's going on here. Let's go to /M. Let's go to MES, which is the micro E-mini for the S&P 500, and kind of see what's going on here. And again, we saw that pullback and then the little bit of a rally yesterday, and today we see the gap down and a little bit of a rally. So we're kind of in the same boat here when it comes to the ES, and we're looking for maybe to go long above that resistance level from a technical analysis standpoint, although we're seeing waning momentum. The MACD is pulling back. The trend line in the CCI is pulling back a little bit. So starting to see that maybe falling off here a little bit. And maybe looking at that as being the possibility, again, if this closes below that resistance level, which was support back here, the possibility of going short in this particular case, driven by the technicals. So now we've looked at MES. One of the others that we've looked at /MGC. This is the gold futures contract. And I think if we look in our monitor tab, we are long a contract in the gold futures. As a matter of fact, that's doing what we had expected it to do, which was to move higher. So we're going to go back to that chart, and we're starting to see this little bit of a breakout again above that resistance level. Not at all unexpected to see gold rallying when the dollar is moving around and when there is trade talks and tariff issues afoot. Maybe gold reverting back to its traditional presumed role as kind of that safe haven. So what we might do is add to this particular position if we get that move to the upside, and maybe starting to look for this little bit of a resistance level break here. So what we'll do is I'm going to create an order here. We're going to right click and we're going to buy, and we'll just create an order to buy a long contract here. We'll add to our existing position if, in fact, we get that move above this level here. So what we're going to do is we're going to make this, we're just going to edit this order really quickly. We're going to say, look, 28.7430 is kind of that resistance level. So we're going to say, fine, we're going to make this a buy stop. Now, here's the thing. Again, remember, this is a stop, and buy stops work the same way as sell stops. Once that trigger, which we said in this particular case, we'll give it 28.7430. Once that trigger occurs, then the market, the exchange, is going to work this potentially as a limit order based on those protection points. And the idea being, and we've talked a little bit about those before, but we'll do some of that in coming weeks. We'll talk specifically about what those protection points are, but it is to essentially a protection method or mechanism on the part of the exchanges to avoid movement in orders like stop orders where the price may be moving very, very quickly. So if the price moves outside of that protection range, that point range, and if I remember correctly on the gold futures, I think it's like 0.25 points. I'll have to look at that. Again, don't quote me on that. That is not, we'll look specifically at some of those numbers. But it is a range in which that order will be worked. Beyond that, the order may be rejected if it moves outside of that protection range. So we're going to go ahead and we're going to put this buy stop order on to get long if, in fact, we get some upward movement here, which we've got some momentum moving to the upside. We're going to go ahead and we're going to click on confirm and send. That's going to add to our long gold position already. So we click on confirm and send. We read through this order. We recognize that there are exchange costs that have to be paid, and the impact in terms of this trade, in terms of that margin. And we're going to go ahead and we're going to click on, we're going to put this in our futures group, and we're going to go ahead and click on send and fire that order off and wait to see if that fills. There's no guarantee that it will, and we've got to remember the characteristics of buy stops work the same way as the characteristics of sell stops. So we're going to go back over here to /M ES, which was the one that we were looking at maybe getting long if we get that closing candle, and /MCL, the crude oil. And we're almost there. We're almost closed on that candle. We'll see if we where that ends up here, and we'll see where that next candle falls, and look at getting into this long position, trading that up to the upside. Now, what we maybe need to do in addition to this is look at where that trade might be taken off. If we're starting to get this little bit of a hammer candle here, we've got a bit of a resistance level up here. We set an alert before up around this $80 mark. What I'm going to do, and this is one way that we can accomplish this without getting into the current the miasma of stop orders, is we can set an alert. But remember, an alert requires us to do something. A stop order may take action without our intervention, but remembering that when we're talking about stop orders in the futures market, that's a little bit different than a stop order in an equity. There is the potential that something won't happen, and so we still have to pay attention, right? Attention must be paid. To borrow a line from Stephen Sondheim's musical Assassins, attention must be paid. So we're going to go ahead and we're going to put this alert down here at 74.19, and we're going to replace that alert. So now that alert is at 74.19. So if this moves up to 74.19 or above, which is kind of this resistance level off of these candles here, ideally that will tell us, that's going to give us an alert that will tell us, hey, this market has moved higher than that level. So the balance always is in terms of getting into positions and waiting for additional confirmation, is that waiting for the confirmation may put you into an entry point that is less ideal, right? Less optimal, meaning you're paying more for the contract here if we're waiting for that additional confirmation. But it's always a balance, right? The balance is always the trade-off between additional confirmation versus getting in early and maybe taking a loss, right? So we've got to kind of balance this out. Now, we could put an OCO bracket on this order. Again, recognizing, and Michael did a great job in talking about some of the questions that were out there about OCO bracket orders. The context, understanding that we may sell at a particular point on a limit order. That limit order, again, may not fill exactly at that limit price. And then placing a stop order as a protection on the other direction, again, recognizing the characteristics of those stop orders going in the other direction. So what we might do is simply this, is we look for this this potential move here, and we'll look for where this closes. And theoretically, I mean, here's the thing. We could say, well, we're almost at the end of this 15-minute candle, and it's likely to close above our resistance level, but do we know that for sure? We don't know that for sure, right? Yeah, the Sondheim indicator, attention must be paid. There we go. Now we're starting to see some movement to the upside. Again, no guarantees that this candle is going to close at that level. We want to see where the next candle ends up. We're starting to see some movement to the upside here. Probably seeing the JOLTS numbers coming out. I would suggest that maybe is one of the things that is creating that move to the upside. And this is always the challenge, right, guys? Because you're sitting here and you're watching something move, and you've got a set of rules and you've got a methodology, and you're thinking, wow, I'm going to miss it. It's that fear of missing out, right? That fear of missing out in this scenario. We're looking for that potential for this move to make that move. So to get into this trade. So what we can do while we're sitting here in waiting for that potential move to the upside. And again, this is, we're waiting for the close of this 15-minute candle. And we want to see that candle close above this level here. And we want to see that candle, if it closes below, right, then we may look at going short. But while we're doing that, a couple things we can do. We can click on that feedback survey link that is out there in the chat. Thank you, Michael, for reposting that. And that's going to be a great way to help us out, help us to make these sessions better for you. Fill that out. It takes just a couple of minutes. You can click on that link and you can set it aside and you can come back and fill it out at a later time. All right, that works too. So in other words, we got to maybe determine where we're going to exit this trade on a limit order if we do get out on a limit order. And we could use that limit at the same point up here, right? We could get out at that 74.19 mark. There's our candle. It closed, so we've got an entry signal. So let's do this. Let's buy custom with OCO bracket, and we're going to create this order to get out. So I'm going to say, look, we've got a pretty good level of support here at 71.55. We're going to use that as our support level, and we're going to use 74.19 as our mark to the upside, 74.19, and we're going to get in here. We're going to get out theoretically on a stop triggered at 71.56. So remember, that order is not going to be guarantee that we're going to exit at that level. We'll make that good till canceled. We'll make our limit order good till canceled. So getting out if it goes up to 74.19 theoretically, and then out theoretically if it goes down to 71.56. So what we might also do is add an alert here as well. We're going to make this a limit order. So my limit order is going to be based off of the top of that previous candle. So we're going to get in, if we can get in at 72.68, 69 or better. It's currently at 72.63. So we're going to go ahead and we're going to fire this order off. Now, we're going to click on confirm and send. We're going to read through the order, buy it, sell it if it goes 74.19, sell it if it gets down to 71.56. We recognize our exchange fees here that must be paid, and we're going to go to click on futures to send it to that group, and then we're going to go ahead and we'll fire that order off. We got in 72.69 as our entry, and we're going to look at getting out on that limit price. What we can do is we can click on the gear icon for our chart, and we can click on show orders and click on apply and OK. And there's our order setup right there. There's where our stop order is. There's where our limit order is. There's also where our alert is. So what I'm also going to do is I'm going to make an alert. I know that this order is at the 71.56. So I want to do this. I want to go create alert, single, mark at or below 71.56, and we'll go ahead and create that alert so that that alert is there so that that can let us know. It's like, bing, you had a stop here, pay attention, make sure that if that doesn't fill, you need to maybe do something about that. So being aware of that, right? Okay. So these aren't market orders. These were a limit and a stop in creating that order to enter, and we got into the trade and we're looking at exiting. And again, remember, that's going to be subject to the market movement, especially on that stop. Let's go over to our /ES or MCS. MCS and see where we are there. Whoops. Sorry, /MES. There we go. And we're starting to see a little bit of a pickup there. We're seeing a close above that level. So we're above that support level. So at this point, we maybe will go long looking for, let's zoom in here a little bit and see where our resistance area might be up around this 61. See where that resistance level exists. Let's go 61.11. That's going to be up here. So we'll do the same thing. We'll do a stop below the 60.27 and we'll get out theoretically at 61.11. So what we're going to do is right click, buy custom with OCO bracket, and we're going to make our limit order 61.11. That's that resistance level that we can see on the longer chart. We'll make that good till canceled, and we're going to make our stop. And again, remembering the characteristics of stops, 60.27.48. We'll go right down here, 60.27.48. 48. We'll make that a stop good till canceled. And even if we did a stop limit order, right? The stop limit order defines kind of that range. Stop limit order is going to function the same way. There's the, first of all, no guarantee that it's going to fill within that limit price, that limit range in the stop limit order. And second of all, it's still going to get worked as a market or as a limit order by the exchange because of those protection areas. And if it goes outside of that protection area, it's not going to fill anyway. So we're going to put that in here. And again, we're going to come back and we'll put those alerts in as well. Our limit price to get in is 60.40. We're trading currently at 60.43. So that order, we've got to open up that lock a little bit and readjust our limit orders, which were linked together. If we wanted to take those links off in terms of price, we can unlink those, but we're going to make that still, once again, 60.28 as our stop. And we said, what was it, 49? Yeah, I think it was 49. And now we've got our limit order, 60.46.50. It's moving. We're starting to see some movement here. So we might chase this just a little bit. And again, 60.40, we'll go to 60.46 as our limit. And remember, limit says that price or better. No guarantees that this will fill, but we'll go ahead and confirm and send. We'll read through this order, make sure that we're aware of that. Again, recognizing those exchange fees. We'll go ahead and we'll put this in our futures group. And we'll go ahead and send that order off, and we'll see if that order fills for us. So you can see where those alerts are. And we filled at 60.44. So we started to see that movement to the upside. And actually, we sold at 60.44. Our limit was at 60.46. So we got it at the market price. There's our limit order. We're going to go ahead and create those alerts. Right click, create alert, single, at or above 61.11. Create that alert. And then we're going to create the other alert right here, just so that it gives us that additional warning, create alert. And we're going to create that at 60.28.49 at or below. And we'll create that alert there. So we've got those alerts in place. All right. Now, here, let's do this real quick. Now, let's just kind of quickly review what we've done so far. We added to our gold contract. So we've now got 2 contracts there. In that gold contract, we went into that crude contract, and it's moving in our direction. And our MES, our S&P 500 micro, is moving in our direction as well. So 2 resources I wanted to show you really quickly here. Let's pop back over here to a couple of places. This is at schwab.com. And if you go to schwab.com and then to the Learn tab and you go to Futures, this is a great place to learn more about trading futures. And somebody had asked me the question the other day, where do I learn about the fundamentals of futures trading? A couple of great places to do that. Right here on the Learn tab in schwab.com in Futures, and then come down here to Courses, the fundamentals of futures trading. And then if you go to Futures Trading, so if you go to the Trade tab and you go to Futures, so if you hover over that tab and you go to Futures, then you see market information. And so this is a great overview of some of the futures contracts and the futures markets that are currently moving. You can see what's going on a daily basis. And you kind of get a little bit of a heat map there on the side of each one of those squares. Now, the other place that you can go for more information is right here to the Trader Talks webcast channel. And this is a great place to go if you want to type in the word futures right here. Then you're going to see the futures trading web playlist. You're going to see individual classes that have been taught in this futures trading webcasts as well. There's Michael Fairborn right there talking about pivot points. So some great ways to learn more about trading futures. And so what we've done, we've looked at some contracts, we've discussed some futures markets, and we placed some example trades. Guys, let's keep an eye on the futures market today. Overall, it's certainly seeing perhaps maybe a little bit more volatility simply because of geopolitical events. Good opportunity to learn and practice in paper money. My thanks to Michael Fairborn for helping out. My thanks to all of you for being here. My thanks to our great production staff for joining us as well. And we will see you guys again next Tuesday for more discussions about futures. Take care, everybody. Bye-bye.